Thanks very much, Simon, and welcome everybody. Look forward to doing another session. I have done a session with Round the Clock Trader before, and I very welcome any questions on the chat that you might have. Please don't think there's any silly question because if it is new to you, we understand and we're happily trying to help you. Intelligent Trading Academy. Let's just tell you hopefully a little bit more about ourselves. We have senior traders here. I'll go through a bit about my background and why I think I'm qualified to teach people the craft of trading. We have been professional fund managers. We've been government backed and recognised as a leading trading educator. So our courses are continued professional development accredited courses. We very much take an institutional approach. We're going away from these social media lifestyle sellers that are showing you fast cars and gold watches and stuff like that. It's not our way of doing it, and that's the reason ITA was born, was to give you proper education on how we do this. I've taught at the London School of Economics Technical Analysis, as well as being fundamentally trained with some of the banks that I've worked at. We've taught many individuals that have become into full-time traders and work within the industry. We are very much a community of professional, supportive and like-minded individuals providing trader education, and we do have offices in London, Munich, and soon to be hopefully Joburg, as well as a satellite office up in Manchester. Our programs focus on three key areas: psychology, risk management and trading strategies. And the idea is to really create a global community of traders where we understand trading can sometimes be a little bit isolated, so we want like-minded individuals talking to each other, and to that effect we invite everybody in-house. I think when times become back to normal, we'll invite everybody back in-house once a month to come and meet each other, go through a session. I'll do a session during that time just to iron out any issues that you may have. So who am I? This is me. I worked at Societe Generale for 15-16 years and Credit Suisse for 6 years, trading FX and equities. At Credit Suisse I traded the Australasia markets, but started off really my passion as a trader was to find out how it worked and to get into trading at the big investment banks was slightly different to what it is now. Being 52, my corporate life has kind of has ended as they're looking for grads and younger people to take over trading, and so they can mould. And so I looked into the educational space and saw retail traders were really being underserved by sales companies, not real experienced traders. So we've managed some big accounts. I am a member of the Society of Technical Analysts. Worked in a few centres. That's good culturally wise. You can find out different things about trading if you work within different cultures. A very disciplined and consistent trader. I try to follow a strategy and I'll be very conservative in our risk. We'll only risk between 0.5% to 1% per trade. We don't want to be busy fools. We want to be educated, conservative traders to look for those higher probability trade setups. So I might see 10 setups, in a day. I might only execute 1 or 2. I know Simon mentioned the other commentator will be speaking about oil. We bought oil yesterday and yielded 1% overnight. So it can be done, and I will show you more about the screen and bits and bobs and our trading book a little bit later. So we are experienced in risk management and educating traders and trader mindset, and hopefully some of you like what you see and will join the academy. We do offer funded accounts, but obviously we work with about 100 traders at any one time. The starting pot is 10,000 that we split 50-50 in a P&L wise. But just think about if we had more than 100 traders on the $10,000, it's $1 million of cash we've got out in the market. So you can build those accounts as well, but maybe if you take up one of our offers today, I might be able to show you that in a little bit more details. So that's me, MSTA, a member of the Society of Technical Analysts and certified technician. So why do people trade? Well, especially during these times, we're finding lots of demand for programs like ourselves, and really people like to get a secondary income. Could be a passive income. Really, when you first start trading, 90% of our community will be working, so you can very much do this alongside your own current job. It's good to be your boss, good to be in charge of your own destiny. And it's always nice if you've got time, like lots of people have at the moment, to learn new skills, educate yourself in a new environment. Financial independence, understand the financial markets. Good to manage your own money. We've got pension funds, houses, or whatever doing their thing. It's good to manage some of your own money. When we do well, it's good to have a sense of achievement as well. And ultimately, we should pat ourselves on the back when we do things right. Always give yourself a target, but make it achievable. Don't make it a goal that's not achievable, because mindset-wise, that's always a negative thing. Oh, we never made what we thought we would. If you do well, don't be scared to pat yourself on the back, because as humans, we're too quick to criticize ourselves. But when you do well, make sure you pat yourself on the back and give yourself, a good big well done. Ideally, we're looking to increase our wealth as well. I think with the way technology is these days, it's good to understand technical analysis. And whilst our strategies will get you in on a technical basis, we'll always be monitoring that fundamental aspect that could kick us out or actually make a higher profitable trade. We're trying to spot profitable trading and investment opportunities. We use some ready-made algorithms that I've back tested for many years. They're semi-automated because I like to apply my manual analysis over that I've taught and I've learned over many years. When you first start, I think it's very important to understand why you're entering a trade, because sometimes when you enter a new business, and this is what it should be deemed as, you should think of this as a new business. You kind of get lost in all the prices that are moving, and it all seems very fast. So if we adopt a methodical approach by following structured trading strategies, it will help you with some of your mindset, and we'll talk about a little bit about our psychology and mindset a little bit later. And hopefully that will create some consistent returns. We will risk manage very conservatively, as I said, 0.5 to 1% per trade, and it's good to understand how to manage our mindset, which is really the most important part when we're first getting into as an early young trader. So how a trader thinks and how trading actually works, you can see the left-hand pie chart here. Just a trader will look at indicators, entries, and just look at their exit. What we need to do is manage that trade and not overcommit our capital by risk managing. So trade management, risk management, and continuous learning is extremely important to make a success of this. And I said 90% of our current community work full-time, and they find what we offer fits in quite nicely with their day-to-day routine. So you can look to and analyze the markets within an hour, probably 60 minutes during your day, as well as all the live stuff that we give that's all fully mobile accessed. So really concentrate on your learning, your trade management and risk management as you go through your trading journey. So education, why do we need it? I think it's typically important. It is about learning a new skill, and when learning a new skill, the key is to coach for your element of increased performance. It's really important. I can't stress this enough to understand why you're entering a trade. What we don't want is a haphazard approach, because with a haphazard approach, you'll get haphazard results. We're trying to find some consistency, some fluidity in your trading to give you a better experience, because too many retail traders lose money unnecessarily by not taking good education in the first instance. Even if you're a professional sportsman or women, they surround themselves with good training, coaching, discovering techniques. The best football players in the world, they don't just go out 11 aside without a team behind them. They always have a manager, they have a coach, they have dietitians, they have people, physios, everything, mindset coaches, everything to do to make them the best in their craft. And that's what we want to do with trading. We want to continually strive to improve our results. So technical analysis, why would we use technical analysis? Well, as I said earlier, with the invention of IT as it is, and all the brokers using an MT4 or the majority using MT4, we can identify things within technical analysis. And technical analysis is a craft in itself that's been around for many hundreds of years. But luckily enough, you know, all the computers, all the algorithms, all the maths is done for us. So with us and our teachings, as long as things are aligned in the right way, it's a good reason to enter a trade. And I say we are looking for those higher probability trades. So fundamental analysis, that really examines companies' earnings, the bigger economic pictures, and data, financial data that governments will release. And that, obviously that's very newsworthy, and it impacts incredibly on markets and on currencies, on different assets in different ways. Technical analysis is using market indicators, price action, some of which are mathematical transformations of price, some might include volume, and other particular mathematical equations to get to where we need to get to. But if we look at these, and I'll show you some of those techniques a little bit later in this presentation, if we utilize some of those techniques, what I've gone through over many years, and put in a particular order, we get higher probability trades and good entry trades. Then we can effectively trade management or manage that trade very effectively. There are three main principles of technical analysis, and one is market action discounts everything. If anybody understands what a candlestick is, that's really all that's engulfed during that period, and I'll show you that candlestick in a second. Prices move in trends, so we have uptrends, downtrends, and also we do have range bound or sideways trends. So when something's a bit doesn't really know which way it's going to go, you tend to find things are range bound. And in technical analysis, history tends to repeat itself because if it's done it before, it's highly likely to do it again. It can give us a higher probability trade. There's things called head and shoulders, double bottoms, double tops, very standard patterns that have been in the markets for many years, that once you see them, it's done it before, it's highly likely to do it again. And I'll show you the 4-hour chart in oil shortly, which I think a double bottom could be forming, and that might be of some interest to some of you traders out there. Well, we use algorithms just really to be lazy, just to program certain things. There's no perfect algorithm out there for trading. I like to use kind of eclectic mix of both semi-automated algorithms as well as lots of manual analysis to enhance the probability of more successful trade. But they're in our all-day life in washing machines, cars, everything that we do, and hopefully we can download some of our algorithms if some of you join us into your MT4 with the broker active trades that we use. So many traders that we've had have been successful using our guidance and our teachings, and hopefully you can benefit from that as well. So we were talking about candlesticks, and when we talked about the first main principle of technical analysis was the market action or price action discounts everything. Here, a bullish candle opens and closes higher, so creates that green candle. Bearish candle closes lower than where it opened. The high and the low are the same on both candles because that's the low of the price of the day and the high of the price of the day. But really, the candle color is a bearish candle. It closes lower than where it opened. And obviously a bullish candle closes higher than when it opens, and that's what creates that kind of nice colorful candlestick. And I like to look at something that's visually nice, colorful and structured because it could help with a faster way of analyzing the markets. And the candlesticks, they have patterns within patterns themselves anyway, like dojis, bearish engulfing patterns, to name but a few. But we have a cheat sheet that we're more than happy to send out to you on joining. So if we put it all together by following a simple set of rules, we can look at higher probability trades. And as Simon mentioned earlier, all this background noise of lawnmowers, hedge trimmers and bits and bobs like that. If you hear a couple of dogs barking, it's only because they want to go out. So apologies for that. So if we just follow a simple set of rules, we can probably pick better probability trades. So as I said to you, we don't want to be busy fools. Yeah, this is on the 4-hour time frame in euro dollar over a period of time. My manual trend line is included. Okay, so I put that in. Bear in mind, standard technical analysis practice is we should be expecting 3 equality touches to create a valid trend line. So we can see on break of that trend line and the candle closes above, I have bullish momentum. I have a bullish structure in that my trade or my price action is breaking away from that downtrend, that's my opportunity. Okay, here I sell, my candle closes below my trend, my parabolics or other momentum indicators are now bearish, that's my opportunity. My downtrend is then broken up, momentum changes, that's my opportunity. So you can see out of 1, 2, 3, 4, 5 trades, four good winners. And please bear in mind, opportunities will come in all different shapes and sizes. So we need to make sure we're in the best place to be able to cope with that opportunity and to spot it and to action it when it comes along. And I will prompt you 24/7 in our live Pro Trader Skype group, which will be more than welcome to join us. There's a free offer to get involved with that. And I'll tell you a little bit more about that later on. So here, by just following some rules, we can pick higher probability trades. We don't want to be busy fools. And say if that's over, I don't know, a 3 month, that is over, let's have a look. How many months? Probably a couple of months period. 1, 2, 3, 5 trades in one particular pair. That's enough for me. We're analysing 40 assets or instruments, 40 instruments. So we've got plenty enough to do. We want to be quality traders looking for higher probability results and banking some cash when we get to areas of price influence, which this 200-day would show as resistance. Okay, so moving on to our strategies, we try and create simple and structured strategies in the first instance for you to understand exactly what you're doing. So we're experienced mentors, so we can give you, we work with easy, intermediate and advanced traders. I've taught some traders in some of the biggest investment banks, and we know where to start from ground zero, or even intermediate traders that know a little bit, we know how to kind of help them, keep them on the straight and narrow. They're tried and tested systems, they're simple and structured, they're systematic, methodical, disciplined for consistency. Risk management is key, so it's part of our trading plan or our strategy. Don't overcommit your capital. A stop loss is our friend, so as this helps preserve our capital. Our stop loss, we're proactive with, because we're going to be moving that to entry as soon as physically possible. Helps preserve our capital. Also, by using a strategy, it helps remove the ambiguity and emotional ties, because you're following some rules. It makes your headspace a little bit easier. And remember, market is not picking on us, doesn't know who we are, was there before we were born, be there after we've gone. So really, it's just, if you're following a nice process, you should have a better way and a better way of thinking about your trading and the markets. We mentioned we would talk about a little bit about psychology and mindset. We'll talk about it a little bit, but I want to get onto the screens because I do like to waffle on a bit, and time does go, and I want to show you some analysis. But we'll talk a little bit about psychology and mindset, because it's very important. And this is really a person's way of thinking, their opinions and their beliefs. And we all have different tolerances to risk. A lot of us have different or many different opinions and different beliefs, and that's what makes the world go round. But within trading, we need to try and hone those skills and not let them overtake everything that you're doing within trading, because again, following a strategy should alleviate some of these issues if you struggle in this particular part. So trading will be unlike anything many of you would have done before, and it's important to get your mindset management and method correct. You'll have a different tolerance to risk behavior when in a trade, and what style of trading suits you. Very much here at ITA, we don't have a modular program. It's very much to work on your strengths and weaknesses, because your strengths might be somebody else's weaknesses and vice versa. So if we can give you an all-rounded education based on your particular needs, the better it is. Yes, we're there because we offer funded accounts. There is an assessment period that we do with you, but obviously we can't teach this in 1 or 2 days or over webinars. I would never profess to that. I don't do boot camps or anything like that, because I think they're kind of a waste, because you end up taking in too much information, and we all have different abilities of how we retain that information. Here at ITA, we offer you the chance to work with us for 6 months, so you find some fluidity and hopefully some consistency in what you're doing day to day in the marketplace. And if you miss a day, it doesn't matter, the market will be there the next day. So you can jump in and out at your leisure. Okay, so we really concentrate 10% of our mind on our strategy, 30% on risk management. And you can see how important psychology and mindset is. When we're in a trade and when you open a trade, typically you start losing because you've paid away the spread. So you paid away the difference between the bid and the ask. And really, that start, oh, why am I losing? Why is this, that, and the other? But you just have to be patient. If you use the longer term or the longer time frames, it's just a bit more gentle way to be into traders. You know, it's not all about the Wolf of Wall Street with our head on fires, running around screaming. Trading can be nice and consistent by being conservative, actively trade managed, and being like a kind of understand the strategies that you're trading. So by creating some discipline, which our strategies will, you'll hopefully find some consistency, which will breed a little bit of confidence, enhance your patience, and hopefully increase your profits and success. So it's a nice graphic there. So create a discipline, and hopefully all these other things will slowly fall in line once you're with us for a period of time. So a trader, they really start losing because they have improper risk management. They revenge trade, they chase the market, you know, they think, oh, this one's still going up, it's having a really good time, and they don't put any thought process in behind their entries. They break the rules, there you go, not following your trading plan. They lose their structure and process. They let losses run and they cut their winners too quickly because they've had a bad period. The form to do is to cut your losers and let your winners run. Okay, so very rarely, or do I put in a target price because I don't know how it's going to go. I let the market come to me. I let the market tell us when's the ultimate time to hopefully get out. And you know, I can't pick tops or bottoms. I still have losing trades. That's part of the game in trading. But over a period of time, over a 12-monthly period, you should find solid, profitable results if you're putting all the procedures and everything you need to in place. So we can't control price movement or the outcome of a trade. We can control when we trade, when we don't trade, what assets we trade, when we exit, when we enter, our risk. Yeah, because if we're going to commit 50% of our money to one trade, that's foolish risk. Yeah, that means you've got 2 trades before you've blown out. If we risk 1% of our pot, that means you've got 100 trades, 100 goes. You know, I don't lose 100 trades on the go. I lose 2 or 3. I might lose 2 or 3, but my winners will be outstripping that anyway. We can control by using strategies to a certain extent our psychology and mindset. We know our worst case scenario. We can choose our tools, yeah, what we're learning, and that's part of the strategies that we've done. You can choose and you can control your development and learning. How much time you want to put into extra reading, that's totally up to you. Anything you want to do to enhance your learning, the better for you. And all I would say to all our delegates and all potential clients, the more you interact with us as professional traders, that would help you expedite your learning. So there's no two ways about that, and we've seen it in the past, and we see it moving forward. So our educational funding program, or a funded program, how does that work? This is not an exhaustive list, but there's plenty of things that we will offer. It is a 6-month program. We give you trading journals, refinement documents, individual assessment. You can have in-house and remote sessions. We do these kind of webinars. You get access to the trading techniques that we look for. You get daily email correspondence, and obviously we think you get a real income opportunity through our education and mentorship. And I'd happily answer any questions there. Guy, what are little black dots? There'll be parabolic stars. Thanks for the question. A parabolic star means slop and reverse. It's just a momentum indicator. We can help you download those. We get your screens looking exactly like ours. Without education, simply you hinder your chances of success. You know, just look at the following brokers. You know, why be part of 79% that fails when you could be part of the 21% that actually does well? So hopefully you can see the benefits of us. We don't own any broker. We just use a broker to facilitate our business. That's it. Nothing else. Nothing more, nothing less. We don't own charting software. We don't charge subscriptions or anything like that. you just come on our program to get involved and align yourself, and hopefully you can earn through that process. So the recipe of success, you need obviously all the ingredients. So you need support, news, and analysis, courses, our chat group, indicators. So really important to get that kind of recipe of success correct and in the right order. It takes a little bit of time, but don't, I'm not telling you can do this overnight. That's why we want to work with people for 6 months. It does take a little bit of time just to get that kind of pot right, and you will have some failures as well as hopefully some successes, but be patient. If you're patient, then they seem to be the better traders that we tend to work with, people that don't tend to chase the markets. I'm not looking at scalping. I'm looking for structured quality analysis for higher probability trades. So most of our traders, they make between 5 and 15% a month. Typically run rate is a little bit higher than that at the moment. So we've had a really good February and March. And obviously April now coming to the end has been pretty good for us as well. So we'd invite you to join us and help you change your trading. Here's some example P&Ls. You should be looking to aim for stuff like this. Our closed trades recently, some you can see, look, this is up to date. It's in April. We're winning more than we're losing. We happily share those techniques with you. We can show you some advantages. We used obviously MT4, which looks something like this. This is our the platform that we use. And remember, we were talking recently regarding oil. What does oil look like? Well, really, this is the 4-hour time frame. So here, I think it looks a little bit like a double bottom coming in. Okay, at the moment, we're hitting this resistance zone. But yesterday we purchased and we banked. We've made 1% because the analysis, that was our low. We have a higher low kick in. Is this the start of a new uptrend? We don't know yet. I don't necessarily think it is because of the fundamental oversupply, and obviously there's nowhere to store anything. So we want to make sure we can make profitable trades. Here, I don't particularly like this sell trade, even though we had an opportunity, because the parabolics switched quite a distance away from where we got the cross. Here, everything kind of happened at the same time. So that to me is a higher probability trade. Okay, and we made some nice trade on that, and we happily share those techniques with you. That's just one of our strategies that we kind of look at to get involved with. So our advantages are we are professional traders. You've got plenty of experience. We're qualified technical analysts. We use an independent broker called Active Trades, where we expect our clients to go, so we can assess you for our funded account. And we do have our funded account would look something like this. If we give you 10,000 over in the first instance, we expect you to make 6%. We give you 40, then every 10% thereafter we'll double it to a 7-figure, which is quite nice. And the reason we do this is we're backing our education with our funded account opportunity, and we do have student expectations, because I think that's really important that we need to manage your expectations and you understand where you've got to get to. So here, our aim is to teach all students the process and not promote a false lifestyle. We see too many on social media saying too much about, this is what you can have, or this, look at my big car that I've got. So that's not our problem. We just need to make sure everybody is stable and consistent as a trader. Our program is taught by experienced traders, and it's designed to treat to give you what you need and your own individual circumstance. Okay, so we'll teach you all at your own pace, and we'll work on your weaknesses and help with your strengths, so everybody gets the best opportunity to succeed. During month 1, obviously you have a live trading account. We'll provide you with in-house setup. We'll cover how you enter trades, create charts, look at our analysis. We'll also start receiving a daily email and get access to our live Pro Trader Skype chat. Lots of communication with the traders each day, and benefit from our monthly in-house training sessions. Obviously, they'll be webinar based for the foreseeable future while the virus is still kicking around. Month 2, we should now be comfortable with placing trades. Obviously, some of you might be proficient with MT4 and the trading strategies. You'll be receiving and listening to our daily podcasts to give you market insight. We issue 2 a day, one for the UK European opening and one a little bit later for the US markets opening. We'll start introducing some manual analysis, and we'll provide you some resources through our library of books that we have, ebooks that we have, and we'll be giving those to you on regular times. We'll also be proactively assessing you during this month to monitor your progress and confirm hopefully a funded account access to you. 90% of people that join us will receive a funded account, but again, extra effort and communication regularly with our traders will expedite your learning. Month 3 will look something like this. More interaction from our students, more day-to-day stuff that we're talking, more trade ideas, more analysis being sent both ways, and really you should have adopted a routine now for time of your trading and start seeing some consistency and some good results. Now with your funded account active, the opportunity to start profiting is now real, which we split 50-50. We're back in our education with our funds. Month 4, you should be confident in your analysis. Students usually request further individual coaching. We can talk about at the time. And we'll be working hard to get you to that next level of funding of $40,000 for the opportunity to increase your revenue. Interaction with the other traders in our community as well will add further knowledge and learning and increase your experience. It's good to speak to your peers. It's good to talk to other people, other traders that have gone through a similar journey to yourself. So, please bear in mind they are available. You can talk to each other, and that's really why we like to get everybody together each month to talk about good, bad, and differences and talk to us about any problems that you might be having. Month 5, hopefully you've got your 80K now. Or you've got your 40K, you should be confident and fully equipped. Students regularly email in their analysis for scrutiny, for further affirmation. Your development is continually assessed with us, and hopefully during this month you'll work hard, we'll support you and move you up to the 80K funding level. And after month 6, you have a final session. You'll be held any further chance to talk to our traders, iron out any parts of the analysis or trading that you think you might be having difficulties with. After our 6 monthly in-house sessions, you should be fully equipped, show signs of understanding consistency of your trade setups, capital and trade management. And remember, we can always learn. There's always options to continue with us after 6 months, but ongoing support and access to our Pro Trader Skype group is given, again, for continued support, just to make sure you're still where you need to be. So hopefully that helps you. That's obviously one of our good benefits is backing our education with our funded account offer. Okay, we've got good trader experience, but we place the most important on your return of investment. So treat it like a business. Yeah, what you pay should be offset about what you're earning, and then everything there is decent profit to you. So, and really trading is quite a cheap business to get into. Question is on the funded account, how do we deal with losses? We risk manage those, so we'll be underwriting those losses to a certain percentage through our robust technology. So don't worry too much about that. We're going to guide you and help you get on with where you need to get to. So the losses, yes, obviously if you're losing consistently, we're going to just hold that account temporarily and just bring you in and have a chat, but we will fund a certain percentage of losses in the first instance. So we're going to talk about our analysis and strategies, and I'll go back to our live charts. I hope that answers your question. Let's if you have any more, just chuck them down on the chat. So we're going to go on to our analysis and strategies. I'll go. The real one I want to work on today is called the Fast Track Momentum, a strategy designed many years that works quite nicely in FX, indices and commodities. This one here, the Fast Track Momentum. There are some other strategies that we can look, but I really want to concentrate on this one today. So by identifying a select set of rules, we can take advantage of price action each day. Semi-automated, enhanced with manual analysis, We'll educate you as you progress with us. So it's multi-asset class functionality as well as multi-time frame. We can do 1 hour, 4 hour, and daily. Remember, on the 1 hour time frame, you're going to be more busy because that's 24 candles in a day. So you would end up doing obviously a lot more trades. Don't end up being a busy fool. Okay, so I tend to stick with the entry on the 4 hour and then look at the analysis for on a daily and the kind of weekly. So enhancing probability all times. So if we look at KTM, we can spot some peaks and weaknesses, but for a new trader or peaks and troughs, for a new trader, it can look quite daunting. If we add rules of the FXFTM strategy, our probability is enhanced immeasurably. So you'll learn this with us. Here we know we're in a downtrend at the time of this long moving average here. So this one here, we probably got out for break even or might have scraped a little bit. The trend is broken, that's our opportunity. Our trend is broken in the downtrend, that's our opportunity. And remember, consistency in our analysis and opportunities will come in all different shapes and sizes. So it's important to recognize, let's place a strategy, let's look for added probability, let's not be busy fools, let's learn the craft, let's learn the terrain, let's prepare, and then that will give us an added opportunity to actually get in. We don't always just use market to press to get into our trades. Sometimes if we go back here, sometimes we could actually put in what we call a buy stop, something like that. If we look at that kind of new order there, we have to put in a pending order, and there's buy limits, sell limits, buy stops, sell stops. So a buy limit would be obviously below the current market price. So here I want to buy at 15.40, for example, I would need to put a buy limit in. A buy stop would be above the market price. So I say I wanted to buy on this break at 18.50, I'd have to put a buy stop in, and vice versa with the sell stops and sell limits. My sell limit, if I wanted to sell at 18.50, I'd put a limit in. I sell stop, if it broke 15.40, I would put a sell stop in. So we'd guide you all that way. Don't worry too much about that at the moment, but there are different ways, as well as just clicking the button at market execution and going, well, I want to buy at market now, a certain lot size. We also have a calculator to help you, and we would download that for you in your setup session with us, because it's very important for us to manage your risk. We don't want you risking more than 1% of trade in the first instance, and maybe slightly less when you get the funded account opportunity. So you can see, by being conservative, proactive traders, you're going to be in a better position to hopefully make money and capture profit from the markets. So hopefully you'll learn all this through your journey with us. Even on the Dow recently, we had some good triggers. We know here we've got a selling opportunity, we sell, the trend line is broken, we close above this long-term moving average here, our momentum switches, and we get a buy opportunity, we get a sell opportunity there, but you can see that's where we're going to capture profit. Again, I can't buy back there because I don't know that's going to be the bottom. I'll probably buy back there because it's reconfirmed, it's closed above this long line again now. So again, we're looking to capture money, we're looking to move our stop loss. Even if we put this long trade on here, I don't keep my stop loss here, I move it all the time. I'd be proactive, I move my stop until I get another opportunity to sell and I go short. Okay, so we need to be proactive in our trade management, conservative in our risk management, and solid in our strategy implementation. We use trend analysis as well. Obviously, Michael Cavell was a well-known author, host of successful trend following podcasts, and these techniques have been around for many, many years. Okay, so we utilize technical and fundamental analysis to establish the true nature and structure of the market, and we do this by using trend lines, patterns as a framework, and we can do this in a multi-asset class and as well as multi-time frame as well. So it's really high reward trading. So, but we must be strict with our rules. We can apply a certain amount of discretion, but we know these is high reward trading, but I don't want to go too much into this just at the moment. But with our trend, we will be looking at market structure, chart patterns, nature of the market, price action. We'd look at multi-time frame analysis, so you could look at the 1 hour, 4 hour, maybe the daily time frame, even skipping out to the weekly. sorry about that. And they are considered obviously one of our most effective trading tools within the trader's armory, especially with our community. We look at these things, and we've got an ITA pattern blueprint where we specifically focus on the most common patterns utilized within our ITA community, and it'll provide you with the patterns that you really need to continue to hopefully become a consistent trader or a consistent independent trader and be able to do this craft for yourself. But by learning, you're going to give yourself a better chance. So risk management, 1% of trade. We look to we have a break-even methodology where when the trade gives us the opportunity, we want to get to break even just in case it fails. So what's the point of leaving 1% risk or 1% loss potential on the table when we can move it to break even? That's how we're going to move our time frame. Obviously, it's important how the structure of that price action moves into a particular phase. So we look kind of like a high moving or aggressive move in. You get a corrective phase and aggressive move out. They're good to trade, and you can call those flags and pennants. You can spot them typically in the trading day, and they are a common theme. Typically, they are continuational patterns, or technically they are a continuational pattern. So you want to buy these in an uptrend, sell them in a downtrend. Sometimes they're really good at the bottom of particular trend cycles, but we can enhance that with looking at where our particular momentum is. Pennants as well. Obviously, I quite like these ones. There's really no there's a kind of pincer movement here. There's no real movement. Where can that price go? Where can it go? It has to break upwards. I don't trade the failed ones because obviously if that's an uptrend and a continuational pattern, I won't trade the breakdown. I will break the continuational pattern, and I expect that to move out. I quite like these patterns because price actions get squeezed until it bursts out. It's like a coiled spring. If it goes into this area here, it's known as the apex, and it would be a failed pattern. But we can teach you lots of those standard procedures during your time with us. We can also, I don't want to spend too much of these, there's ascending channels, there's descending channels, but we're looking for the high probability setups. So if we scale in on the hour one, say here, dollar CAD here, we start selling here, close below the here, we start selling, we're seeing an impulsive corrective nature, we start selling. You get a corrective nature, impulsive corrective nature, okay? And what you really see here is a great opportunity for good risk reward. Up 21% on a particular trade was realized profit at that time in dollar CAD. Now some of the enhanced techniques you'll get moving forward, but that won't be from day one. We obviously want to look at our structured strategies in the first instance. But these are all the things we can teach you, and it's in your wins, not in our losses, and we're going to manage our losses. So today we have two free opportunities for you, and you're welcome to join our free Pro Trader Skype chat or book a free 30-minute remote session with me at ITA. I'm just going to drop our email address on the chat to you now. So anyone who's interested in taking up the offer, please just let me know, and I'll come back to you. Just say you attended this webinar and you want to take advantage of our offers. Please send it to info@intelligenttradingacademy.com, and I'll happily send you an email back with the links on. Obviously, we can do a Zoom session or Skype session, whichever you prefer, and we'll get you into our Pro Trader Skype chat as well. So happy to try and assist that with you. Okay, so it's all about learning the process. So
Adrian, I'm posting that email address now for everybody to see. So
okay,
everybody
great.
should be able.
Okay, thanks, Simon. So how, if we need to follow a process, and very much is what successful people do. They work hard, they never give up, they have a clear vision, they set themselves some goals, they understand their terrain or their marketplace, they aim high, you can achieve anything if you put your mind to it. Your continued learning and progression is important. Work behind the scenes, prepare, try and strive to improve your game. That's really important, because obviously the preparation is key for our success, and we can do that in the evenings. Most of I do my prep on Sunday nights for the markets, and I look at every morning, probably about 7 o'clock, get on my desk, start analysing and start sending out a few trade ideas or even trade updates. Where do we need to manage certain things? During your time with us, you'll get to understand how to read the overall picture, and as professional traders, we should take some time to identify areas of support and resistance. And this is really how we're going to drill down on understanding how we can trade the markets, understanding the markets, especially in big news event driven environments that we're in at the moment. We also need to identify what tools we need in our analysis toolbox. And we look at confirmation indicators to give us affirmation that we don't use them in isolation. The chart is our template, but these would give us, as long as they are constructed right and based on our strategy process, then these are a great tool and a great strength of added probability and better trade for us. So we do something called, somebody say, oh, what are these dots? They're called Parabolic Stars as a technical indicator. But for us, it just helps us stay in a trade longer and helps us identify a change of momentum and direction. We use relative vigor, and it's based on the highs and lows over a 10-day average. Typically, if it closes higher than where it opened, it's going to be in a bullish phase. But if it closes lower over that 10-day period than where it opened, it's going to be in a bearish phase. It can be a little bit flaky, but I just like it to be in the right direction when we trade. And also very popular, the moving average convergence, divergence, very much good for momentum, no good for overbought or oversold. We would use the RSI for that. As you can see, over 70, the relative strength index is overbought, below 30 is oversold. And I can just check where we are as well. If you look at something like that, where did I have crude weekly? You could see on this crude weekly chart how the RSI was oversold and still is after a potential rally. Yes, on the weekly, where do we see this going? So for us, old support turns into new resistance. So it's technical analysis. We probably see any upside a long way away into the 40s. That's a long way away, but that's our upside cap at the moment. But I'm going to say that I really think that's going to be a long way away. But old support turns into new resistance. So maybe $40 is the upside cap on a longer term picture for crude at the moment. So to help you navigate through the markets, you've got to have your trade set up, your thought process. So you've got to prioritize your best chart setups. I said earlier, I might get 10 setups, but I might only trade 1 or 2 of those. So give us a higher probability. Are we trading with the trend? We can drill out on the weekly chart to identify that. Where's support and resistance? Where's our longer term moving averages? There's 2, simple or exponential. We use an exponential moving average because it takes more credence to current data, so we get crossing happens quicker. Slightly gets us into a better price, in my opinion. Where's the RSI? Is it overbought, oversold? We could look at that. Is momentum changing? We can check the MACD for this. Does the RVI indicate any preference in directional change? So using simple set of rules, looking guidance, looking for affirmation, confirmation, confluence, you're then looking for better results in your trading. Also importantly is obviously the fundamental economic news that's coming out. Is there any referendums? Is there any interest rate talk? Non-farm payrolls, very important, first Friday of every month. The US deliver their jobless figures. Obviously could be fairly horrendous after what we've been going through, but I think we all expect that. So there'll probably be some shocks, but maybe the markets all price that in. But it's important as you as a trader to commit to your trading plan, and for us as professional traders to support you for your real continued development. We're going to use moving averages, and you can see again, if I show you this kind of long moving average here, how, let's open that up on oil. Okay, it's on the 4-hourly. How once we get below it, we stay below it for a long time, and it acts as a good market bellwether for resistance. Okay, even the upside is at the moment on the 4-hourly. If we break this double bottom here, yes, 23.75 is the level of resistance that we want to be aware of. If you take that trade, obviously what you want to be careful of is, what you don't want to do is bang on 24, 29, bang on. Leave a few crumbs for the master. Yeah, if you work your trading as a minimum 1-to-1 risk reward ratio, but let the trade breathe. If it goes up and down, you'll get other opportunities to go in, but you'd expect that to resist. So actually respect that line. You might want to sell part of your trade and run the balance if it starts going up. But again, if you're banking, you're being profitable. So no one's ever going to lose their shirt, you know, by actively banking and managing their account. And assets do go up and down. So expect that's never going to change. That's always going to be something that happens. So we're nearly done. We have 10 minutes left, and we'll go over a few bits left of what we've got. If you look at moving averages, as I say, you know, this long-term moving average here, how important is that? Our weekly analysis on the NASDAQ, and I can show you that live. That's where this is what we were kind of helping with our account here. If we look at the NASDAQ, I'll just say here on the weekly basis, how important. That's not the NASDAQ, that's the S&P, but how important that support was there. We've had coronavirus collapse the markets by 30%. The 200-day moving average here is actually here. What's the betting? That the NASDAQ might hit new highs at some stage. Why? It's because with low interest rates, there's really, as an asset manager, there's nowhere else to put your money in because equities still offer a dividend yield. So you've still got a yield on there, and quantitative easing obviously wasn't around in probably 1929 and maybe some of the 2000 crash or incidents that we have, and quantitative easing is supporting these markets. So we might all felt like, oh, we've lost so much money, but these markets are not far from their highs again, but on the weekly basis. So worth respecting that 200-day moving average, as we would do if we ever took a trade in oil. So nice, respect that particular long-term moving average. Okay, even on the Dow, you get a spike below. You want to see the body of your candle below for further move down to further move up. Okay, so spikes that would hold as support. If you get the body of the candle above or below, you would expect further strength or weakness. But again, I'll enhance those techniques with you. We can look at understanding how to do trend, support, resistance, and breaks. Happily help you with that. Again, manual trend lines, easy to spot. Again, here, whether I might have not taken that trade because the 200-day resistance was close by, I'd be more likely to take a shorter trade. We have some testimonials. Our clients have done well. This guy Alan here, the ability of advice to get from the team is invaluable. If we could provide you with some consistency, then hopefully we will. Jazz, lovely lady from Bristol, she really enjoyed her time with us. It's great that she actually got involved with the Skype chat and stuff like that. Again, recently closed trades, all very nice. They are up to date. You can see that I can't make these things up. We have weekday coaching sessions. We offer extra online and in-house sessions with you. We go through your strategies. We'll go create watch lists. We'll help you with your trading plan. It's very much a collective community to give you clear and direct education on how to trade the financial markets, and hopefully not get yourself in a pickle. We're trying to provide a really clear and transparent and give you some confidence to actually make a success of trading. There's lots of people that say it's fast and easy. There is no fast fix for a fast buck. There is a process behind it, and hopefully I've given you a good hour or so of our time to show you what we do and how we can help. We'll obviously give you some webinars and podcasts during your time with us. The aim is to analyze the markets. You can obviously email in and we can do a session, a webinar for the group based on questions from the group. And also we can do any open trade adjustments that can be amended. Lots of our trade adjustments are done over our live Skype chat. And again, I'd welcome you to come in and join us on that Pro Trader Skype chat. We'll provide you with weekly analysis and real-time updates. Again, constant communication with us will expedite your learning. And our monthly meetups, they have to be webinar based at the moment, but typically first Saturday of each month we'll invite all our traders in. Our next actual webinar is on the 9th of May for all our VIP traders that are already on our course. It's a valuable Q&A session. So we offer lots of things to get you trading. I'm going to be wrapping up now. I'm happy to answer any questions that you've got. You've seen our benefits, very professional. Hopefully you've liked what you've seen, and you can join us. You can pay lots of money for 2 days, but we think we're the best in class for what we offer presently, and we happily go through lots more with you. Again, all we ask is you partner, learn, build your profits and earn with us. So it's up to you. Please take up advantage of free offers you've got today, and just to see for yourself, please email me at info@intelligenttradingacademy.com, and I'll happily give you access to all that. And I welcome any comments you might have either via myself or Simon.
Fantastic.
That's about me. That's about me done for today. Are there any questions?
Thank you. Yeah.
Over to you, Si.
Adrian, what comes through to me? Obviously, I sit here and I host a lot of these events with various trading educators and traders, and some people can be quite, they take a lot of pride in what they're doing, and they think they're reinventing the wheel, and it's just the most amazing. They're the only ones that are being able to spot this trend and things like that. With you, what comes across to me is that I think because of your background in the city, working in the banks and on the floors, there's no surprises. This is just a process. It's a very professional approach to it, and you seem to understand exactly what you would do in all sort of circumstances. And it's just that different mindset that I think you bring, that you got working in the city, is what a lot of retail traders need to try to engender, need to try and emulate that, to take a lot of the emotion out of the trading. So it just comes across to us sitting. I don't know if anybody agrees with me, but I think they probably will. A couple of questions.
Okay.
Philip asks, you seem to be offering proprietary trading opportunity. I'm currently working daily trading, recently overcome the psychology walls from what was about trade formulation on high HTFs not being done. I can see your analysis from your webinar. Just getting to grips with my own psychology. I think, Philip, okay, I think that's not so much a question. It's just, I think you're just sort of reaffirming what Adrian's offering here, which is an opportunity to get involved with the strategies and to learn to trade and profit with the guys at Intelligent Trading Academy. So thanks.
Yeah, I would say, join the free Skype group, book in a Zoom session with me so you can have a personal 30 minutes with us, with myself, just to answer any questions that you might have. I'm happily commit my time and resource to doing that, because I think we will benefit from that kind of setup.
I know a few of the guys did that a couple of weeks ago with you, which was great. So give them that attention. Gene is asking. He looked at we're going back to the last charts. He said you were using the 200 EMA, but what were the other two type moving averages, please?
That's part of the process, or part of our specialist algorithm that we use. We would set those up with you, and again, I would say come to one of our free Zoom sessions, and I'll go through that with you in more detail.
Fantastic. Okay.
To be honest, I don't want to give everything away for nothing, because it obviously dilutes our offering.
We understand that. That's entirely reasonable. I think you've given us a great analysis and lots of things to think about today already. It's 1 o'clock already. Where does the time go? Thank you, Adrian, for joining us. Those dogs definitely need walked. So hopefully you can,
good.
This afternoon, I'll have to take mine as well. He's looking at me forlornly, thinking, "Why are you still staring at this little screen?" So it's been great to have you. Thanks again, and have a good weekend. We'll catch up again in the near future.
Thank you very much. Thanks for the opportunity, and very much welcome. I'm talking to anybody or responding to people's emails. Keep safe, everybody, and I look forward to speaking to some of you very soon. Thank you, Simon. Thanks for the opportunity.
Wonderful. Thanks again, as always.
Cheers.
Here we go. So, a great presenter, Adrian Slack, Intelligent Trading Academy. Thank you, everybody, for being with us. I see we've almost doubled our attendance throughout that presentation there with Adrian. So you've come in. Keith, no sound. suggest it's just a problem with you, because I think everybody can still hear me. Should be working. Sometimes the sound comes and then just reconnects on its own, but if we have a persistent problem with sound, sometimes just logging out quickly and then re-logging back in normally takes care of it. We do few and far problems with this GoToWebinar platform. It's always been quite trustworthy for us. But anyway, if you have just joined us, welcome. This is the Round the Clock Trader Working Lunch with myself, Simon Campbell, and we've got two speakers. We've just heard our first of the two speakers, Adrian Slack, and everything is being recorded today. So if you have missed part or all of the first presentation, you can just jump onto the website roundtheclocktrader.com and access the free video library there, and you'll see the videos posted up there. They won't be there immediately, but given 3 or 4 hours, they should be live there. And of course, once you're there, you've got access to all 500 or so replays that we've been doing since 2000, and I think it was about the beginning of 2015. I'm rather amazed to tell. Don says, when you first log in, there's sometimes a quiet delay before the audio kicks in. That's right. Yeah, just as sometimes a delay, sometimes dependent on the connection. Well, let's move on. Our next speaker, Ian Foster, is in the room. So we're just eating into Ian's time by a couple of minutes, but we can say good afternoon. When we're ready, we can unmute the microphone. Ian Foster. Oh, good afternoon, Ian. You there?
I'm here. Can you hear me okay?
Fabulous. Great. I can hear you fine. You can hear you fine. Thank you for joining us. It's been a while, my old friend. How are you?
Not too bad, thank you. Not so bad, thanks. Not moving out too much, but apart from a little bit of exercise. And yourself, Simon, are you all fine? Yeah.
We are all fine. Yeah, we're starting to get to move around a little bit more just in the last few days, which is a great relief. Because the novelty of the lockdown is worn off several weeks ago for sure. So we're looking forward to things going back. But I think we're all moving in the right direction, which is good. But of course, interesting times in the markets, and your approach, the price action strategies, I guess have probably been lending themselves to these markets. Shall we go across to do the screen share before, just so we can get started?
Yeah, that's fine. Yeah.
Now you should. Question from Dominique. I missed the beginning. Where do I go to review the webinar? Dominique, the recording will be published at our website, which is roundtheclocktrader.com. I'll pop that there for you. And when you go there, you got free access to the video library, and that's where all our replays are published into there. So you just need to go there. He's still got a problem with the sound. I'll reply to him off air in a minute. Fantastic, thank you. Ian Foster from Be a Winning Trader, price action methodology. Well, this is a good presentation. I know you've been updating it recently with all the changes in the market. So where should we get started?
Well, Simon, what we're going to do is we're going to look at the real markets, but I think it's best that if I give an outline to how I make our trading decisions based on my price action methodology, and then for everybody in attendance, then that will give them a slightly better understanding when we talk about or look at the real markets, where I'm coming from and where perhaps there may be a trading decision to be made or is occurring. So I think that's the best approach. So it's not a full presentation in relation to our methodology, far from it, but certainly it's going to be a bit of an outline and an understanding that hopefully everybody will be able to pick up at least a little enough to make more sense when we go to look at the live market.
So we know what a little bit about how you've arrived at these signals and how these.
That's right. Yes, I think it's best. Well, obviously, it's quite interesting when we look at a live market. All I can say to you, just to reiterate what you've actually said earlier, it has been the most. I know we're in a lot of, a lot of dilemmas. We all know what this pandemic has brought to us, folk. but those that, and which each and every one of us here today are interested in trading and are traders, and certainly if we're not traders, we're certainly have a great interest in trading. It has been a fantastic time, and I'm not just saying this, I've proved this to, we've done live webinars with my own members and with other people that have an interest in our methodology, and things have worked out very well. It has been really superbly good, okay? And Simon, you're quite right, price action has worked a gem, and you'll see why. You'll see why. It's very clear to be seen with no gray areas, and we'll go through this and we'll see exactly why I say that. Now, you need to be knowing, you need to know what you're doing. Don't get me wrong, I'm not trying to say that anybody that hasn't got, you know, if you haven't got a proper, dare I say it, methodology and very strict risk controls, it's not going to work so well for you, obviously. But I'm talking about if you use and you have a methodology and you use the risk controls associated with that, and being able to minimize your risk and hopefully neutralize it as quickly as possible, then it certainly it will work for you across all broad, but not just in times like now, but as you know, Simon, risk is everything when it comes to trading. You know, that is the key. Now, I say methodology first, because how do you know where or how to control risk if you haven't got a methodology? So please forgive me if I put a methodology first, but everything after that has to be, as we do know, excuse me, as we do know, is risk, 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 and risk, and that's basically it.
Fantastic. Great. Okay, well, listen, welcome, Keith. I know you've just got your sound sorted out, so good to have you in. So we're all eyes and ears. Ian, shall we just sort of hand you the control?
That's
and,
fine.
Take it away. Thank you.
Yeah, again, welcome everyone, and I hope you enjoy my brief presentation, and let's hope then when we look at the live markets, we're going to see something similar to what I've actually talked to you about over the next 5 or 10 minutes here, maybe longer. Again, as Simon says, my name is Ian Foster from BeAWinningTrader.com. For those that have not come across me before, all my trading decisions are made using my price action methodology. There's a very brief disclaimer. There's a very brief disclaimer there, which it's a condensed version, folk. It just lets us all understand that when trading the financial markets, it may not be suitable to all of us. And because we are going to look at a live market, folk, if you do hear me talking about buy and sell signals, please do not take those as anything other than for the purposes of education, okay? So the first challenge of a trader is determining consistently good trading signals. I think we'll all agree with that. And the second challenge is then knowing initial risk and then being able to manage it by minimizing it and then letting our trades run when they are going for us in a follow-through manner. And that is very easy said, everyone. Sometimes it's not so easily enacted, but I can honestly say to you that my price action methodology satisfies both of these two main challenges. And very, very clearly, there is no part of this methodology that is subjective in any way. So there's never a conflict of signals. So if you and I were trading the same methodology and we were looking at the same charts over the same time period, or in the same instrument, rather, I should say, and the same time period charts, we will have the same signals. So let us take a look at how my methodology is used from beginning to end to analyze if there are buy or sell signals, no matter the time frame. So it goes in a couple of different steps, folks. So we're going to look at it from the very outset to the very end, and then we will look at it. We will be able to follow this up exactly in the live market. So there are three main components, and that is, first of all, understanding the basics of price action. Knowing how to read the price action of a single bar is so important, folk, and it is that puts the foundation into your trading the same way as you build a foundation when you're building a building. A good, strong foundation gives you a very strong place from which you can build on top of. And the second part is learning how to determine when a vertical bar trading pattern is in place, and then being able to determine those particular patterns. It's not like flag patterns, etc., folks. It's quite easily seen. It's just like looking at your middle finger highs, middle finger lows. We want to use a different word. And then the third part is how to use our proprietary software trading tool that further confirms our price action signals. And by using that, then what we're doing, we're further putting the probabilities of success in our favor. Unfortunately, we have no guarantees, but we're putting the probabilities of success in our favor. Now, I just want to reiterate or very clearly state rather that all my analysis is done by reading the open, high, low, close charts rather than the candlestick charts. And an open, high, low, close chart, for those of you that may not be as familiar with them as candlesticks, is this particular setup here. And the main reason that I look at the open, high, low, close charts and use those for my analysis, and believe it or not, I've converted many people, to be polite, to look at this rather than this, is because I'm more interested in where the close is in relation to the high or low rather than where the open is. So the open in relation to the close is not as important as where the close is in relation to the high or low, and I'll state very very simply why. If we can use the FTSE for an example, it opens at 8 a.m. in the morning, closes at 4:30 p.m. So the opening price is the oldest price, folk. The opening price is the oldest price. The closing price is the latest price. It's the most recent price. And therefore, if we're doing some technical analysis, we want to know what the closing price is in relation to the high or low. And it's much easier to see in an open, high, low, close chart, because a candlestick chart, if you have a number of candlesticks open, you will see either closed bodies such as this red body, or you will see an open body such as this body here. An open body here is indicating that this close in this particular, if this was the FTSE, that the close here is higher than the open. If it was a closed body, the close is lower than the open. But what may happen in a candlestick, and does happen, you could get an open body in its own right, probably indicating bullishness, where the close is actually closing higher than the open, but actually is closed closer to the low. And you can get the complete opposite on a closed body. So it's just not as simple to see. Okay. So bullish bars, just a very simple analyzing of a simple single vertical bar. And the importance of this, folk, is going to be very key. And it's key whether you're looking at a 1 minute chart or whether you're looking at a 60-minute chart, etc., etc. And you can take this on up to weeklies and monthlies, etc. But a bullish bar, because this close here, this little tick here indicates the close. This one here to the left is the open. And because this is closer to the high than it is to the low, that is a bullish bar. And that is giving me the probabilities of this market breaking to the upside. That is telling me that the probabilities of breaking to the upside are much greater than it is breaking to the downside. And then if they do break to the downside before it takes out the highs of this particular bar here, that is like turning, excuse me, a coin in its head. So it's like turning a heads and a coin to a tail. So if that was a positive, which it would be, a bullish scenario, then and it done the complete opposite, that would turn a bullish scenario into a bearish scenario. Okay, so that's just the very basics of understanding a very simple single vertical bar. So let me show you this basic price action information and why it is so important when making trading decisions. So if I can just look here, or we all look together actually, at this weekly chart, and you can see way up before the falls here, what had we got? We had 2 previous weeks where we had bearish bars. The closes were closer to the low than they were to the high. And the market went down, and the market went down and down and down. But I want to point out something very clearly now, because that's all right looking away back, what, 1, 2, 3, 4, 5, 6 weeks ago, 7 weeks ago, 8 weeks, longer. Each of those represent 1 weekly bar. What is important is now, today. So this was last week's bar here. And this is what we call an inside bar. What is an inside bar? It's trading with a lower high than the previous week's bar. In other words, the previous bar to its immediate left. And it's also trading with a higher low. So it's an indecisive bar. Market doesn't know where it's going, what it's going to do. But this previous bar to this bar, so in other words, 3 weeks ago, this was a bullish bar. And that was indicating to me, my fellow members, that the probabilities of the FTSE breaking to the upside at 5943 were much greater than breaking to the downside. Did it mean that it was not going to break to the downside and take this low out? Of course it didn't. But we're talking about probabilities, everyone. And we know exactly when we're wrong, because if we have a bullish bar and we're taking a signal off a single bullish bar, or a single vertical bar rather than a bullish bar, if it happened to take this low out before it would take the high out, that's where you're wrong. So if you're just analyzing and taking a trade using weekly charts, you would have your stop underneath this low. So last week, as I've already said, with an inside bar, and then this week was a little bit jittery. Now, I had a live trading room on Tuesday, and I quite categorically stated that I was looking to go long the FTSE, as indeed I was last week. And I done 3 trades in the FTSE last week, 3 long trades, folk. I locked in 25 points of profit. My second trade was a 15-point loss, and a third trade was break even. Because at that stage, I was still looking for the high to be taken out, but the market wasn't ready to go up. It wasn't ready to go up. But I did state quite clearly, because it's there to be seen, we're not making this up, that the market should take the high out to the upside. And again, folk, I'm very lucky that I entered long the FTSE, as my members know, because we were quite a few of us were doing it together. And then, of course, yesterday, just the market took off big time. It took out the weekly high. So it did we're on Thursday, on Tuesday, and then yesterday it just went crazy. It went up, and in fact, it went up to 6,200, folk, as you can see here. So around the time of the screenshot, which was earlier today, I believe it was around 6,078. But the power of being able to analyze and know what reaction you should have with a single vertical bar is so very powerful, so very powerful. So step 2, our vertical bar trading pattern, middle finger highs, middle finger lows, and this does create a real edge. So what we have to do is to determine when a confirmed high or low is in place, and then compare that high or low to the previous, and that will indicate whether we are in an uptrend or whether we're in a downtrend. And the vertical bar trading pattern highs and lows are perhaps more commonly known as swing highs and lows, but why we call them the vertical bar trading pattern highs and lows is because we've got a very disciplined set of rules that determines when a vertical bar trading pattern top or bottom has been formed. And we know at the time, folk, not after the event. It's very easy after an event, looking back and saying, yeah, there was a swing high or a swing low, there was a swing high, swing low. Yeah, we should have went long, should have went short. But you need to know at the time. And the rules that we have for determining when a vertical bar trading pattern high and low are in place are not plucked out nilly-dilly, folk. It has been through many, many, many years analysis that gives us then that creates a higher probability if you've got a higher low that the market will move up, or a lower high that the market will move down. So it's all about probabilities. So that is why we have the particular set of rules that we have. So just to give you a brief example here before we look at the real charts, that there's a lower high than say this high over to the left. If you make a lower vertical bar trading pattern high, we then should make a lower low if we're going to continue that trend. If we go down lower, we make a further lower high than this high. But then if we turn around and make a higher low, then that means this market has changed trend and this market is now heading back up again. So if we're able to determine exactly when there's a confirmed high in place and a confirmed low, and being able to compare that low to the previous low and that high to the previous high, then folk, we are on to a winner, so to speak. So let's take a look at the FTSE chart. This is a FTSE daily chart, folk. We up here had a lower vertical bar trading pattern high. Now, by the way, you're going to see quite a lot, as I think in one of my previous presentations with Simon, I think somebody said, Ian, what are these zigzag lines? So what they are, just very clearly, this is drawing in a confirmed low a confirmed high, folk. Now you may see some, and you say, Ian, that's not a high or that's not a low. Why is it not? There's a particular set of rules, as I've already stated, that determines when a low or a high should be in place. Okay, but here we had a lower vertical bar trading pattern high, and the market fell 2,000 points. Okay, here is the this week's chart of the pound dollar on a 60-minute chart, folks. Look, and this is with no, this is just clearly picking out the confirmed highs and lows. We had a higher low here than this low, that indicating strength. The market goes up. Yes, it wasn't able to take this high out at this stage, and the first retracement was still a further higher low, and the market took off. And then it reversed very strongly, and it broke through that particular low there. Again, on the way down here, look what we've got. We've got a signal there way above 124, and the market went down to below 123 on a lower vertical bar trading pattern high. There was like a double top here where I think it went up by maybe a pip or a pip and a half. So any time that we're trading the highs, we never ever put our stop exactly at a high, because we do not want to be coming out on a double top, or we do not want to be coming out on a double bottom. But if you happen to be stopped out there, there was a further opportunity to get short again, because look, this high here was certainly lower than this high. That market went down, further lower high, and bye, bye, bye. Thank you very much. So remember, this is not subjective. There's a particular set of rules that we have that determines when this is in place, and we know exactly when this is confirmed, and we know exactly at the time of our confirmation. That means that we have an exact entry point, knowing exactly all of the time when we are wrong. In other words, when we know where we're wrong, that's where we should have our stop. So we got a confirmed signal in round here at the time of our short signal here, our short entry. Our stop would have been above this higher vertical bar trading pattern low. Because let's face it, if we have entered the market with a lower high, everyone, if we have entered it with a lower high, would we want to continue to be short with a higher high? No, we wouldn't. So knowing how to trade in the direction of the vertical bar trend without question helps you make great trading decisions. So it was over my many years trading, folk, that I was always wanting to try and develop something in a visual manner that could further strengthen the methodology, and that led me to develop my STB Trend Trader tool. And as it says here, it was developed first and foremost for myself, and if it's beneficial to me, then I know it's definitely going to be beneficial to others. And then it was released. It's now 5 years coming up this June when I launched the STB Trend Trader tool to my members. It's a visual indicator, and it does not clutter no charts, folk. It paints price bars red as a sign of weakness, blue as a sign of strength, or green as a sign of neutrality. Okay, so if we take a look again at an action, when we use it with a lower vertical bar trading pattern high up here, the market is a 4-hour FTSE 100 chart, folk, and the bars went into red mode, and bye, bye, bye. Thank you very much. Okay. We take a look here at yesterday's FTSE 100 5-minute chart. Yesterday morning, look, the 29th of April, started. There was an earlier trade, beautiful trades earlier in the day, but just I couldn't fit them all in this chart here. Just to keep it clear, we had a buy signal yesterday afternoon. Here's the times, UK times, folks. So those of you that are not in the UK, these are all UK times. And the market went down. It gave us a higher vertical bar trading pattern low. We got the blue bars. We had a higher low confirmed, and up went that market, folk, and we had over on this particular move, there was about 120 point move on that particular first stretch of that. We know the FTSE went higher later and even this morning, but that was a straightforward move. Blue bars, higher vertical bar trading pattern low, and that was yesterday. Okay, we will look today. We'll look to see what's happening by today. Here is a live chart that was taken just earlier this morning, just trading the Aussie US dollar. 60-minute chart. Again, blue bars, folk, came in. We're wanting to see if we got a confirmation that that's going to be a higher low than any low down here. Compare that low to this low, you can see it's a higher low. We have the blue bars already in place, indicating strength. Bang, away we go. Thank you very much, Mr. Market, and that market rallies what does it rally? Almost 200 pips. And this was on the signal came in on the 24th, okay? So last week. So that is the outline to what we're going to look at on a real-time basis now. So is anybody any questions at this stage? No? Everybody okay?
We're okay, Ian. Yeah. Can everybody, everybody's hearing okay? Just give us a little why in that chat box. Normally there's a few more questions by now.
Yeah.
I'm just worried that we're getting some.
No, that's fine. No, if everybody's okay, I'm just, what I'm doing, more zigzag lines, Simon, you know, but anyway.
Yeah, I think we're okay.
Right,
Yep.
that's fine. Just drawing in the highs and lows.
Just focusing, concentrating. So tell us again, yeah.
That's fine, that's fine. Now, this is the E-mini, folk. This is the S&P 500 futures market. We look at a few different markets. We're not going to, we'll look at crude oil, which has been a superb market, believe it or not. I know it's, you may think it's not. And I know the margin requirements have went up, certainly on the falls, don't get me wrong. So, but it has still been an excellent market to trade. And it's been very kind to myself, dare I say. So all I'm doing here, folk, is here's the E-mini. Now, just literally, Simon, before I came on air with you live, I had a member that has just done his first trade in the E-mini, and he sold it. Wait till I just bring up the email. He just sold it at 2940.75 and came out at 2933. So he got 7 points in his first trade based on our methodology, folks. So a lower vertical bar trading pattern high with red bars. So we knew exactly where our entry was, and also where this blue line here was. This is where the stop would initially have been from our entry. And that market, you can see, has went down. Now, I have got on this chart just the standard pivot points, support and resistance lines. Doesn't mean an awful lot to us, folk. It just means that I like to see if there hasn't been a trade entered in here. I like to see, is there a reaction around a pivot point or a support or resistance line? And this market now has went down, double top here, down, down, down. Still red bars, folk. But here's what's key at the middle at the minute, and we will keep an eye on this. We'll keep an eye on this. We've got a bit of time on our side. This market now, you can see what's happened here. I can tell you now, I've got a confirmed higher vertical bar trading pattern low in place here. And look, if this becomes a high, which it's not yet, it's a higher high than this high. So when it's round the pivot, still got the red bars, okay? So the sum total of selling pressures is much greater than the buying pressures. But let me just give you an outlook to how we analyze this. The same thing now, this is an rate range chart. So just to let you know, the S&P 500 futures markets will move in quarter of points. So you can see it goes like 29, 25, 75, 26, 26, 25, 26, 50, etc. So every 4 points is equivalent to 1 full point. So for it to move from 29, 28 to 29, 29, it is 4 ticks, folk, okay? And that is what we will call for range. And in this instance, it's an 8 range, so therefore every bar here consists of 2 points. It's not a 1-minute chart, it's not a 3-minute chart, it's not a 10-minute chart, it's purely price, purely made up of price. And the advantage of that being that we are seeing exactly the price movements, and it's not that this market has made a low at 29.20 and it's come up again and back down again at 29.20 and back up again and back down again at 29.20, and that could be in a 5-minute bar, and you would not see how many times it has hit a low at 29.20. But if you're trading range bars, folk, and you're trading purely price, you can see very clearly if that's moving up and down and moving up and down, and you can see many times that perhaps 29.20 may become support. We can see that. Okay, but again, I do not trade without being able to analyze and have an idea of what the 60 or what the daily chart is doing rather. And you can see here, this is a daily bar. Again, we've got a lower vertical bar trading pattern high from up here. Look at the sell signal. But look what's happened now, folks. We've now got a confirmed higher low. And you see, just looking at things exactly as I explained in the presentation, what have we got yesterday? We've got a bullish bar. A bullish bar yesterday. So that means that the probabilities of taking yesterday's high out to the upside is much greater than taking the low out. So the best thing to do is see, has it taken the high out? I just bring up my data window, and I think it slightly has. Yesterday's high was a high of 2959.75, and today the high is 2965. So you mightn't see, so it already has achieved its daily price action objective. Now, what that means to me as a day trader, as an intraday trader, what that means is this, and that is that any signal like this here is not a counter trend trade. If this had been a trade where the market had not taken out the previous daily bar's bullish high, then this would have been a counter trend trade. Would it have meant that I wouldn't have taken it? Absolutely not. But what it does mean, and this is what's key here, what it does mean, folk, is that I would be definitely tighter in relation to my initial risk, and also be very prepared to pull up my stops if the market was going for me. Now you can see what's happening here, folk. I've already said to you earlier when we were looking at this, this can move pretty fast because we're talking about price bars. We've made a higher vertical bar trading pattern low, and now what have we got, folk? We have got blue bars coming in. Okay, and I can sort of prepare a trade here, and I'll just put this
order
up out of the way, and I will.
Order cancelled.
I've cancelled that order, and we're down at the double bottom here. I'll just leave it here 1 second.
Order pending.
So all I'm doing is this, exact same as I've showed you on our presentation, no different, but we know exactly when we're wrong, folk, okay? We know where we're wrong. And what I like about this at this minute in time, this is what I call at a decision point. A pivot point is a decision point. The market's got down to a level, and we're not buying it blindly or selling it blindly, but we will try and buy it at a level around the pivot point with blue bars. So if the bars remain blue and we don't break through these lows down here, I'm buying the market. I'm buying, that's 2 contracts there, folks, going to stop. Okay.
Order filled.
Right, I'm filled. So where's my stop? Underneath my low. Whether I'm right or whether I'm wrong.
Order
Because
pending.
the only time I know when I am right is after the event. So the only thing that I can control as a trader is the risk, my initial risk. So I know my initial risk is from my entry at 29.29 to my stop at 29.2450. I'm risking 5.5 points. Okay, and that's we don't know. We've got a clear daily chart. It's indicating that the market has achieved its daily price action objective. Yes, it's coming down, but what's to say it's not going up? We only can take the signals that we see. And if this is a case that it's going to break through these previous lows, folk, I would no longer want to be long the market because it's changed trend. Okay, we've got a higher low, we've got blue bars. So all I can do is trade exactly what I see. And that is the attitude you must take, whether you're trading on a small 8-range chart like this, or whether you're trading off a daily chart. It's the exact same thing. Now we'll just see how this develops, or we can look at another market, let it develop its own thing itself. We can do that. We'll look at another market as that is developing. If we're going to get stopped out, we're going to get stopped out. We'll see it, we'll hear it. And we'll go to crude oil, folk, another great market. Again, the same thing, a daily chart. Now, what's very keen here with crude oil market? Look where I have the 2 blue lines here. Okay, I have the 2 blue lines indicating the high and the low, of this daily bar. So we have now 1, 2, 3, 4, 5, 6. We're in our 7th trading day, trading inside this bearish daily bar on crude oil. And the low in that bar on crude oil, I just bring it up, is $6.50, I believe. The low $6.50, you see. And we're at $17 now on the June contract. So that is still indicating to me that unless this high, which is a high of $22.58, is broken to the upside, this bearishness overall, when you look at the bigger picture, is still in place. But if we go into a smaller time frame chart, folks, and we look at our 8 range chart, we're again down to R1, which is resistance 1. It's above it, and it's been quite a sideways market this last hour and a bit. Okay, now there was a trade, lovely trade earlier, and a short trade before that. That was yesterday's market. There was a short trade, short trade in here earlier this morning, and then the buy trade in here, folks. Look, here was the buy trade, sorry, this morning. Now, that's okay. That happened this morning. Obviously points, higher vertical bar trading pattern low, blue bars, everything was good. A counter trend trade, everyone, because the bearish daily bar from 7 days past is still in place. It's not going to disappear unless we break that $22.58. We need to get out of that, need to break that hurdle. What is the probabilities? The probabilities are that it will break below 650 before it breaks 22.58. That's all we can see. So we have to very clearly, all we're doing with price action trading, everyone, all we're doing is actually reading the market. It's not just about blind signals. You're also analyzing the signal as the market moves. So you're reading, you're being able to indicate and read, as I call it, a story, so to speak. Now here's a market coming down now in crude oil, a higher, we've got a low here. Are we going to make a lower high? We've got red bars, folks. If we do, there could be a sell signal there.
Order filled.
Now there is our stopped out, just it went up. I'll just bring it up here. We've after getting stopped out, folks, we'll like bring it up on our look. So you see what happened here. The market's now broken down. This market has broken down. We've now got red bars, so we've turned out of blue bars. We've more importantly changed trend, folk. Okay, so there's a 4.5 point risk there, and we've now changed trend. So if it had been keeping an eye on this, we possibly could have been short. And again, if we're short, folk, we know where the risk is. There's a market moving down. Moving down quite nicely, so it wouldn't have been a bad trade. That wouldn't have been a bad trade. Now that's gone. I'm not chasing. That is gone. So let's take a look at the crude oil to see, can we pick up a crude oil trade? Coming onto my chart again. That's a 4 range chart, folk, a little bit of crude oil also. Sorry, just the markets have moved here. There's a little bit of volatility. I know there were some news items out there at 1/2, but there's a little bit of volatility has creeped into the market here, folks. So I don't want to chase. I don't chase. It's all about having discipline. A lower vertical bar trading pattern high. If I hadn't moved over, we would have been certainly up some money at the minute. And the indices are moving down now quite aggressively, folks. So we missed that reversal trade. We missed that reversal trade. So again, it's exactly the same with a lower vertical bar trading pattern high. So what have we got? We've got a situation here where we've got crude oil is trading inside. So what would I rather be doing with crude oil? Would I rather be going long, or would I rather be going short? Considering we've got a daily bar that is indicating weakness. Okay, now I'm sorry, this is my entry should have been up around here, folk. Okay, and the market has now moved, 30-40 points lower. All right, at least you can see the methodology working very, very clearly and very finely. But unfortunately, I'm not in the trade. I'm not in the trade. And the same, dare I say it here, if we go back to our E-mini, our S&P market, again, the same thing exactly, folk. Here, we got our buy signal in here, and you have to take what you see. You have to take what you see. We were able to do that with controlled risk, and the market now is starting to go lower and could go maybe quite a bit lower. And the key here is this has all happened around a pivot point. Now, we might get another opportunity. The market might bounce, and if it does bounce, folk, I will go into a trade providing it doesn't break through this lower vertical bar trading pattern high. Very clear, a lower vertical bar trading pattern high. Now we can look at we can look, and we will look, because it's not just about the E-mini, it's not just about crude oil. We can look at some of the currency charts also, folks. So we can. It's just crude oil is a very kind market to me, and it's a market that I trade very, very actively, and it's been very, very good. And dare I say it, Simon, I had a bit of good fortune on Monday week past on crude oil. Obviously, it had started off above $20 in the May contract on the Monday morning, and it fell quite aggressively. And there was again the exact same thing of an 8-range chart, a lower vertical bar trading pattern high, and there was a lovely sell signal of which I was able to lock in 300 points, and that was brought it down to about $1,400. Although the market had fallen, then it did go on down a little bit lower to around $10 US. But I was speaking with a friend who actually helps me in Be Winning Trader, and I happened to say to him, would you believe crude oil is now trading below $10? This was around about 6:45 on the Monday evening. It fell very aggressively, and it ended up going to 0.1. Now it went lower, as we all know, because it was highlighted in the press, but I actually bought crude oil at 26 cents at 7 p.m. At my stop, which my stop is roughly around 25 points, which is 24 or 25 cents in an 8-range chart. So at my stop anyway, when I bought the 26 cents at my stop at zero, never ever believing it was going to go below zero. But I went out for a walk with my dog because I had a Zoom meeting at 8 o'clock, and I came back at 7:45, and the market was at $23.79 from 26 cents. So it was happy days. So very quickly I just clicked out of my trades, never believing that it could have rallied. And then of course it fell very aggressively and went into negative territory later on that evening. But it was just pure good fortune, don't get me wrong, and it was just because it was a 26 cent risk trade to me at that particular time. So crude oil has been good to me, and yes, the volatility is massively increased. And just as I showed yesterday, there's buy signal this morning, but you can see trades like this here using our same methodology, folks. It doesn't change. We know exactly where entry is, we know exactly where risk is, and that is what is key in any market decision. Now if we go into, we've done that there, we see there was a lovely trade there. That market went from an entry which would have been just above 1725, and it's after falling to 1680. So there's a 45 point move, as there was a 50 point move this morning, folk, in this here. Now remember, if you're trading crude oil and you're trading a standard contract, every contract is equivalent to $10 US. And I have a lot of members, and I say aim for 20 points a day. 20 points a day is the equivalent to $1,000 per week, trading just the one instrument, not having to trade numerous. And again, that there was more than excelled already today. And there's another trade now that's excelled it even further. Okay, so yes, I'm disappointed I wasn't on that instead of flicking back to the let's just see, before we go over to look at some of the Forex pairs, let's just see, have we got a little bounce on this? I think we have a small bounce, which I can get prepared to
Order pending.
sell again. I my stop will be from my entry up to here. Okay, that's a confirmed high. It's a lower high. I want that. I want to be in. And again, what's very important when you're trading, oh, what have I done there? What's important, folk, is not to be chasing trades and not to be digging a big hole. As we all know, any of us that have been traders, we are going to have losses. 100% we're going to have losses, but I talk about having shallow holes to fill. So for example, if I do another trade on the E-mini and it happens to be a losing trade, if I kept doing that and the market starts going sideways down at these levels, what am I doing? I'm digging a deep hole from which to get out. In other words, there's an entry now. So I always say to all my members, do a second trade, and if it fails, be massively reluctant to do a third. Be massively reluctant to do a third, because that is a sign that that market, perhaps at that particular time, is not going in the direction that your analysis is indicating that it should. Okay, and that's what is key. That is what is important, folks. Okay, so with that there, that work away itself here, we know where the stop is. I know what my risk is. I know where my stop is. And if the market, remember, a lower high, we should make lower lows. So we should break below this low. If we don't, that is always a warning sign. Yes, we've got red bars here. I've taken a buy signal that's failed. If I get a sell signal that fails, folks, maybe this market is in an indecisive mode round this particular time. Okay, so again, to move on, as time's going on here, we will look at a few other different markets.
We've got a few questions.
Good.
That are sitting for just the. I didn't want to interrupt in that analysis there, but Peter was saying that he just finding it a little bit difficult to understand what the bars are indicating other than price. What timescale do each bar represent?
Right. I go back. Let me go back if we can. If we go back to what do we bring? Now, the bars in relation to, let me see, if we go back to crude oil, it's a little bit simpler, Simon, okay? Because with a crude oil chart, and there's not too much going on and we don't freeze here. With a crude oil chart, if I can just bring up my data window, this is an 8 range chart, okay? So crude oil is probably a little bit easier to understand as far as an 8 range chart is concerned. So I'm going to click on this bar here, right? And if you take a look over to the left of the data window, you can see that the low is 16.95. If I have an 8 range chart on, then the high has to be 8 points higher than that. So once it would go, so therefore the high has to be 1703. Once it would go to 1704 or 1694, that will create another bar. So if we take a look here, this last bar here, the high was 1690, the low has to be 1682, of which it was an 8 range chart, right? So a bit like if you're trading the Dow, it moves in one full point. It goes from 24, 460 to 24, 459, 458, same as crude oil. So therefore, an 8 range means every bar represents 8 points. If we go back to the E-mini, to explain, it moves in each bar here moves in quarter points. You can see that. You see it moving here down here at the bottom. 1475, 15, 1525. By the way, folks, this market.
I think we're still looking at the TradeStation screen with 6.
Are we? Well, then we have seized Simon.
Yeah,
Are we
So
still
your
looking?
screens are frozen. Yeah, it's frozen for some reason.
Hold on now. It might come, Simon. Just bear with me. Are we still at the TradeStation screen?
We are, and your cursor's just hovering above the.
Oh, hold on a second. Hold on.
Yeah.
Try that now.
Oh, there we are.
Hey, is that us?
Yes, now it's changed. Yeah, now we're on the live market.
Right. Sorry,
Excellent.
there's this trade. All I've done is brought my stop down now to a break even because, but it's 5 points for us. So in this, I'll go back to the crude oil trade and then we'll explain it. Sorry, because obviously it wasn't running. If we go here, I bring up the data window box again. If we take a look at this bar and I click on it on the left here, and we go over to the left, Simon, you can see the low was 1680. Yes. If it's an 8 range bar, the high has to be 1688 because crude oil, like the Dow, it moves in 1 point at one full point. So therefore, if you have an 8 range chart, every time that bar moves 9 points, it will form a new bar. So in other words, each bar represents 8 points. That's what each bar represents, 8 points. Now, if we
Is
go
there
back,
any optimal range, Ian? Barry's saying, what is the best trade range? What's the better? Is it 6
right,
or
well,
8?
we're all as traders, Simon, it's like me, it's like somebody, it's a question you'd be asked regularly. What is the best time frame to trade? That is down to each individual. Okay, all I can say with my experience in trading, I've been trading 8 range charts in conjunction with a 4 range chart for yonks, years. Show my age here now, but anyway. So I find that the 8 range chart, and then let me just show you what I mean. If, for example, now there's the 4 range chart. So you can see the 4 range chart. If I was in a lovely long or short trade, I mean, that's what this would have been. And now I'm looking to try and maximize that. I may move over to a 4 range chart to get me out. If I start seeing a higher vertical bar trading pattern low, or now like blue bars here, I would be monitoring this market here very clearly to see could it get me out. But it's not. I find a 4 range chart, for example, a too fast a chart to trade. But perhaps to get you out of a real good trade, to try and lock in a little, to maximize your profits, it's perhaps that's where I would use it. I find the 8 range chart, just to probably give a more direct answer and not be a politician, I would find the 8 range chart to be the optimal chart for me and many of my members. Okay, 8 range and 4 range, in other words, the 4 range on to perhaps pull you out of a trade or to make a trading decision around one of these lines. In this instance, it's an R1. Okay. Now, if we go back then to the E-mini, which is maybe not a bad market to go back on now at the minute anyway, because it's going okay for us. We should lock in some profits here, folk, and I will do that, okay, because it took a lock in 2 points. But again, if I was trading this, Simon, on my own, on myself, and not in a live scenario, you're probably more, you could pull out, you know, there's a market's moved 8 points for you. Well, I think from a prudent trader's perspective, I would be putting in, which I can do now, maybe miss it, a buy order, and perhaps pull one of those contracts out down here. If it's in other words, if the market happens to come down here, pull one out, and then I've locked in profit in one, and I've more than a break even on the remaining contract, etc. But to go back to an 8 range on the E-mini, it will be 2 full points. So if it moved from 29.10 to 29.12, that would be an 8 range chart, simply because it moves in quarter points. So 4 range is 4 quarter points, folk, which is 1 full point. Okay, therefore an 8 range is 8 quarter points, which is 2 full points. Okay, so does that answer that question, Simon?
I think it does. Barry, does that Does that help to answer? Yes, there we are. Thank you for that. Okay, thanks, Ian.
Right, so we go back now to TradeStation, which is where I have got my I do a lot of my Forex charts on that there, folk, and you can see that there's some movement. There was our lovely, and this is the power of being able to read a market, and also at the same time, be prepared. This was the chart that I showed Simon in my presentation, where higher highs and higher lows right away up. And just look now where the Aussie dollar is getting weaker against the Japanese yen. Here, look at this last bar. Now, it's still blue, because obviously the sum total of buying pressures is much greater. But from a price action perspective, folk, look in round here, and this is what it's all about. It's all about learning to read the market. And you know, I sometimes get excited when you're teaching this, because the amount of times that you're actually being able to turn people's mindset round to not looking just at a particular very pointedly chart, but actually trying to read the bigger picture makes an awful lot of difference. For example, in round here, look what we had, folk, in a 60-minute chart. 1, 2, 3, 4, 5, 6, 7, 8, 9 bottoms. 9 bottoms. There's a market starting to consolidate over the last 9 hours, and of course it's broken through that now. Now, if I was long, which I wasn't, okay, I'll hold my hand up. I wish I wasn't long this, but if I was long, you may say to myself, well, Ian, hold on, you've taken your signal of a 60-minute chart. We want to maximize our profits, folk. What do? Very simply this: go down to a lower time frame chart. And the same thing there, I said, if you're trading off daily charts, go down to a 60-minute chart or a 4-hour chart. Go down to a 15-minute chart here. What do you now see in a 15-minute chart? You're starting to see red bars. Look at this market is broke down. Red bars had already formed. Would that not be putting a little bit of a warning or an amber signal certainly in your mind, saying, hold on, Ian, I've been long this market from XYZ. The market has went up, it's started to consolidate, and I'm now noticing that we're getting red bars here in a 15-minute chart. I may want to come out. And then what do you do, folk? If the market turns around again, you can still keep an eye on this chart. What would you be looking for? A higher vertical bar trading pattern low and blue bars to appear in case that market shoots way up again. But remember what you have to think about. Trading is a nil-sum game. So if you're trading with a broker, direct into the exchange, folk, if you lose, somebody else is winning. If you're trading and you're in the UK and you're trading with a spread betting broker and you're losing, you're making them rich. So you have to think of number one, and number one is yourself. And sometimes if you're overprotective of yourself, then, and you realize later, well, hold on, I've come out of a trade a little bit too soon, you have to be prepared to get back into that trade, because you do not know, as I do not know, where that trade is going to go. Hindsight is a wonderful thing. Here is us this morning on the pound dollar on a 5-minute chart, folk. I'm doing exactly as I explained in my presentation, or brief presentation to you. A higher vertical bar trading pattern low we were looking for, okay? In here, we were getting lower highs. Now there was a red bar, yes. What did I say? Methodology first, risk second. There was the red bar. Our risk was going to be from that red bar close to that high, which was going to be a greater risk, folk. I don't know what market I'm in there now. Oh yes, I know what I'm in. Hold on, folk. I've locked in profits on sorry, one contract. So I need to bring my stop down on the other one here. Instead of buying 2 now, I need to reduce that because I've only one contract, folk. So I'm going to bring this here down more. So there was a good trade. We had a losing trade. Okay. I'm after locking in, what was that? 8 points on the E-mini, and I'm going to bring this down to here. So my second contract is now locking in. We'll make it sure it locks in over. We're going to lock in 4 points. Okay, so the market's going for us. There's only one contract left, folk. I've pulled one out of the market. it's a lovely position to be in when you get a free trade and now a winning trade, etc., etc. Again, all based on the exact same methodology. You see here, we had a losing trade, small losing trade. Would I like to be long now? No. Hindsight's a wonderful thing, folk, okay? But remember, I was able to take my trading decision on the spot. No ifs, no buts. I'm just doing this now. And of course, I'm not going to be one bit afraid of pulling my stop down to lock in more and more profits. That there's a previous low, not a confirmed vertical bar trading pattern low, I say in here, folks. That was not a confirmed low. We didn't get a confirmed higher low in here. But that is an area that perhaps I could bring my trade down a little bit more and lock in, you know, there's 6 points in my second contract. So look, it's been a good trade. So if I go back to the pound dollar, exact same methodology. We're not trying to hide anything. We're totally transparent. No ifs, no buts. Here we go. Where's our buy signal? There's a high in there, folks. We've got a blue bar, but that blue bar came in when we had still a lower low, folks. So I want to get confirmation that this market's now not just going to be in a double top. We want to get confirmation. So we have to get a retracement. We got a retracement in here. We got a confirmed higher vertical bar trading pattern low, and our market there is now, we're on an intraday basis. That market went up to a high here, folk, of 25.29 from an entry roughly around 80. Okay, and now we're into green bars, indicating a little bit of neutrality. The real strength has come out of this market at the minute, so we'll have to be careful. Okay, so if you can't, if you're trading on an intraday basis, folk, and you're trading the pound dollar in a 5-minute chart, if you cannot lock in profit after a market going almost 50 pips for you, well then, folk, I think that spells danger. Perhaps you shouldn't be trading the market, so you don't mind me saying it. Go to a 60-minute chart in this respect, and look, the bigger time frame is also long with blue bars. Look, higher vertical bar trading pattern low. This is our most recent trade on a 60-minute chart. Let me just show you a 240-minute chart. Look what's happening in the 240-minute chart. Higher vertical bar trading pattern low. It went green and now it's went blue also. And you want to know something? We'll show you something on the daily chart on the pound dollar. And it hasn't been like this for some time. Look at this market here. Lower vertical bar trading pattern highs, lower lows, lower highs. And look where it fell. You see what's happened, folks, now? And I know it's time's up, so I'm not going to keep, but we've now confirmed a higher vertical bar trading pattern low in place. The first time for a long, long time, first time this year probably, we have a higher, we've changed trend in the pound dollar based on daily chart. We've got a confirmation of that. We've changed trend. So what is our objectives? To take, if we make a higher low, our objectives have to be to make a higher high. And that high, the last high was 126.47. So we have an objective in place now that if this is going to continue, the confirmation of a change of trend, it should take 126.47 out to the upside. That is it. And we know exactly when this market's going to, if it doesn't do that, it's either going to make a lower confirmed high underneath this 126.47, or it's going to break through this low. So it's very simple. Not complicated, a little bit of learning, but we have a very defined set of rules, and there's our S&P trade is going very, very swimmingly well. Okay, so only one contract there, folks. It's still nice. It's not a bad bit of profit to be making if we're doing that regularly every day, folks, and that's with, you wouldn't be long getting in front in the market. So remember, only dig shallow holes for yourselves, folks. Don't think if you're trading a market and it continually goes against you, that you keep digging at that market, because it's just perhaps not you. I'm pretty sure it's not you, and I'm pretty sure it's not your methodology. Okay, it's the market, and you have to respect the market. If it's not going and doing what your analysis anticipates it doing, then that's the time to stop. Don't dig away and dig a big hole. Shallow holes are easy filled. this market's going very, very swimmingly beautiful now, Simon. So anyway, that is basically me. Now, folk, if you do, you know that we offer to learn all this in depth, folk. I'll just give you a quick rundown what we do. We have weekly live trading rooms. We have regular members training webinars, but most importantly, the service that I offer is the one-to-one training, and I do that one-to-one training myself. It's unlimited training, so therefore we go on and we share screens together. We maybe be on the phone together, and the purpose of that is to make sure that if anybody is coming into my into my membership, I want to make sure that they are totally getting exactly what I've set out that they will get from the outset. There's nothing more horrible in life, whether it be buying a new car or a house or something, or a piece of furniture, that you're promised the earth, the sun, the moon, everything you're promised, until something goes wrong, and then bye, you realize that all these promises that were made were false. And that is something that I am very, very, very determined that will not happen to me, okay, and any of my members. So I do go out of my way to give the one-to-one training to make sure you are au fait. Also included in membership is obviously you're going to get use of our software, which works on MT4. It works on, this is NinjaTrader, works in TradeStation, as you've also seen. And we have a very clear set of rules. As I say, there's no gray areas, no gray areas. There is an offer. If you have any interest, please email Simon. He will send you the link. We're giving a special offer for today's event, and Simon will send you the link, and you can click through that there. So if anybody has an interest or wants to speak to me, email Simon, please. Simon will pass that on, and we will have a chat together. Is there any questions now, Simon?
Yeah, absolutely, and for sure, just send me that email, Simon at roundtheclocktrade.com. Just one question from Barry there was what are your thoughts on leaving trades open overnight, or are you happier to close them off before the markets close?
I have absolutely leave trades open overnight, but not futures trades on an 8-range chart. No, this is solely this market here, because we're looking at it on a real-time basis, and it's great to see a methodology working or not working. You can't be any more transparent than watching something live. That is a different ball game. But if I'm going in to trade Forex, Simon, or the FTSE, for example, definitely, without question of doubt, I would leave that. If I'm basing my decisions of hourly charts or of 4-hour charts, etc., of course, I would leave my positions overnight. But if I'm only taking signals on a 5-minute chart, no. If you're trading a 5-minute charts, folk, you're trading a 5-minute charts with the intention of doing a trade or doing a couple of trades during the day and getting out. But if you're taking a longer term perspective, and the good thing about the methodology from which I've been teaching since 1998, dare I say it, is that it doesn't matter what time frame you're using. So yes, it doesn't change, no.
Okay.
But not the futures market, Simon. Certainly not crude oil at the minute anyway overnight. No, we're not going to do that, no.
Fantastic. Well, if anybody has any final questions, please let them know just now. Otherwise, Ian Foster, thank you very much. It's been great to have you on again. It's been a couple of months, I think, since we last chatted. So good to hear you, and thank you for talking us through the system. It's it's beautifully simple in many respects, but I know it's not.
No, I mean, we have to just
mistake simplicity for being sort of facile. There is some there's some education that needs to go in. There's some thinking behind it.
Yeah, well, if there wasn't, Simon, it wouldn't be worth learning. It wouldn't be worth anything, if you know what I mean, and you know that as well as I do, very much so. So there has to be some learning, and with a very defined set of rules. And if you can take that learning on board and be disciplined with it, Simon, it will work. It will work. It's very clear.
It hasn't really. I mean, I know you said you launched it about 5 years ago, which is probably sort of coincides with about the time that we met, and it's stood you in good stead since then. And I know we've sent quite a lot of students over these years to you, and they're now are still with you. And so, I mean, the testimony is in the length of time that you've been working it and using it, and it works for you, and it does what it says on the tin, and I think that's the best you can hope for, really. So thank you very much.
As a trader myself, I'm going to say this obviously, but it's truthful. As a trader, trading most days, if not every day, and if I knew a better methodology to use, I would obviously be using it myself. You know what I mean? So that I think that says it all. I know I'm going to say that. People are going to very simply say that. Yes, of course you're going to say that, Ian. But it is fact. It is fact. Haven't deviated in any way over the years whatsoever. You know. So here's a market about to stop us out, but it's a good enough market. We've locked in 10 full points in the second trade, Simon. So that's good.
Great. Profit's a profit.
Yeah.
Okay. Well, listen, I think we'll wrap it up there. Thank you so much for joining us, Ian Foster, beawinningtrader.com. Always a pleasure, and thank you for joining us, and thank you everybody else that's here.
Yeah. Thank you everyone, and look after yourselves. Certainly do indeed. Yeah.
Indeed. Have a lovely weekend, everybody. We'll be back again next week with some more events. So yeah, stay tuned. Thanks again for giving us your lunch hour. Thanks again. Bye bye for now.
Yes, Simon. Thank you. Now, bye bye.